Alrighty, Alpha Hunters. Hopefully, you are having a fantastic. I'm sorry, it's not fantastic. It's not Friday yet. Sorry. Tubular, tubular Thursday, terrific Thursday. Yeah, yep. Sorry, sorry for getting confused on what day it is, man. It's just that time of year. Where it's forgetting what days, what, and all that kind of crap. All right. Um, what we got here, and the reason why I'm actually have yesterday on here, I'm going to talk a little bit about it, and this is what happens when you get huge overextensions in the market, whether it's bullish or bearish, right? But yesterday, as we made this little bit of a bullish run, I was kind of early into, my live stream yesterday. I was about halfway done with my live stream yesterday. Anyways, we started rolling down, and I kind of mentioned it's a pretty good time to, be bearish on the market here over the next 2 to 3 weeks, and kind of half joking, kind of said, even right here is not bad because it's not a bad spot to if you kind of do think we'll see some bearish activity, more of an extended pullback, January, February. It's not a bad spot to maybe look to kind of start to build that bearish type of position or protect your portfolio, hedges or whatever. And then what I didn't really kind of think of or think would happen was that we would roll down 1.5% into close. Like we just, I usually take the dog for a walk once I get done with the live stream, and then I'll check the market again, and we just rolled down from that spot about 1.4%. I just crazy moves on the market. So we're going to talk about what this is, what happened, why it happened, and yeah, that's it. And then still focus on what's going on for the rest of the week. So, but we did roll down. I'll address that here after I run through the market here a little bit. All right, so we did after yesterday's wicked sell off. We did gap up pretty good today. We gapped up 0.7%. 0.7% sideways there for the first like 2.5 hours. A little bit of a drop there. Then we've been sideways here for, oh man, another 2 hours. A little bit of bullishness here over the past 15 minutes or so, right before the top of the hour. So that's kind of how the spot is looking today. Q's a little bit more of a bullish gap today. I think they gapped up like 1%. Yeah, take a look at that gap there. 1% gap up there. Kind of sideways choppy, a little bit more of a pullback throughout the day. Yeah, that's kind of the way the Qs have been going. They're currently up 0.7%. SPY, if I didn't mention, up 0.5%. IWM, look at this, just kind of sideways choppy throughout the day. Yep, it's kind of just the way the market's been. Not really a whole lot going on. There's been really one good instance of selling there midday. You can see it here on the DIA. SPY also had that. Here's a look at the RSP, the equal weight SP 500. Nice little sideways action there for the first 2.5 hours, and a nice little drop, chopped sideways. Past 15 minutes of bullishness. Yeah, it's a lot of the market's kind of not doing a whole lot. There was a little bit more of a directional move there as you kind of went into the noon Eastern time of the trading day. So let's take a look at the RSP on a daily. Kind of interesting. We didn't quite get to that 10 EMA with that huge sell-off yesterday, and it kind of just tells you how big of an air pocket we did have on the markets, right? I mean, we had this huge air pocket, and we still had a pretty good bearish day, really, in the last 2 hours, last hour and a half yesterday, and we still didn't even get to the 10 EMA. Still didn't even get there on a lot of these. IWM kind of just still chopping sideways for the past week of trading. Same thing there with the Qs. Qs huge gap up though. After hitting all-time highs yesterday, right? Hitting all-time highs, kind of hanging out up there for, I mean, how long were we up there? Yeah, it had a little bit of a gap down, traded higher, was up there for, let's see, 8:40 to, I mean, about 3-4 hours. 3 hours. Right? That's 3 hours. No, it was like 4 hours. 40. Yeah, it was about 4 hours. Say about 4 or 5 hours, and then it just got to selling off, right? But that just kind of tells you, you just go from all time highs to just absolutely crushing, and you don't even hit the 10 EMA. I mean, just huge air pockets out there on a lot of these markets, a lot of these indices, and still not even hitting that 10 EMA. So even there on the SPY, nice little drop there. So what kind of goes on with those, and why you get those, is when you get those hugely extended, like we've been in a pretty good move, and then you just get this huge extension. What will happen is sometimes you'll see it on a gap down, and we did gap down yesterday. And one of the things that kind of made yesterday so brutal was that we actually traded higher for the first half of the day. Like the first half of the day wasn't too bad. We were positive, and then we rolled over, and just the momentum kept it going. And the thing about it is, when you get to those situations where you've been in a long rally and you make a lasting move here, like we've had over the past like 2 weeks, you get that another push higher. It creates an extension, just an overextension, and people aren't going to chase that. A lot of people aren't going to chase that. Retail people will chase that, but the big dogs, they're not going to chase this. They're not going to chase this. They'll do this, right? That's the beginning. They're not going to chase the end. So are we getting close to the end? I would imagine probably so, because that was a pretty good pullback yesterday. And that's the thing that happens, is you get those very quick air pockets. And once the market figures out that, oh yeah, it can just roll right through all these price levels, there's not a lot of volume there. That's the part that you need to understand. There wasn't a lot of volume here. It just kept rolling down. Like, look at the volume all the way up until this candle right here, and we were already down a pretty good amount all the way until this one right here. So from, let's say, taking out this little bounce low here down to about that area, that was already 0.5%, and then that candle was a 0.5% candle, because down to the top end of that candle was about 0.43%. Down to the low end of that candle is 0.91%. So that's the thing, is like there was just no volume until we got down 0.5%, and then things started getting triggered. More volume came in, but this wasn't a great deal of volume. I mean, not for the move that we're talking about. And so I'm gonna bring up something here on Twitter that just brings up a really horrible situation for the markets to be in. I don't really follow this user of intellect, but I like the post that this account made. The purchase of $1 million out of the money, or I'm sorry, not out of the money, at the money SPY put contracts just 2 hours before the market closed caused the sell-off. Yeah, if you look down here, never mind, this is not the... well, there's another chart out there. Let me see if I can go find that. Oh, I can go find that one because I liked it. Initially valued at $15 million, the contract astonishingly inflated to $520 million. Okay, this is the part where it's going to get interesting. The magnitude of this deal required the market maker to place a substantial hedge, a potential potent enough to exert a negative impact on the market. To provide some context, acquiring 1 million puts is akin to adapting a short position worth a staggering $47 billion. Is this market manipulation? Yes and no. While those with significant funds can influence the market, there should be automatic triggers in place to prevent this, especially on days of 0 days to expiration. The net flows buy sell simply clearly shows the action. Okay, so don't agree with all of it, but this has gone on before 0 day to expiration. Like that's not a big deal. I mean, it's that's yeah. I mean, so this kind of activity on the market has happened before. Like it has happened before, even before 0 DTEs. The thing about it, though, is that they were able to take a position, and once they were able to push the market past a certain point with only about $520 million of full value, after leverage, right? They used like roughly $15 million is roughly what this post is saying. And some other posts and other things I've seen roughly about the same kind of calculations. It winds up being that you can cause the market to have that kind of an impact with that the options leverage. So that's where, when there's not enough liquidity and you have these overextensions like we've had in the market from this huge run that we've been in for the past month and a half, the market becomes very thin, right? You climb further up the mountain, the air becomes very thin, and that's what happens. It doesn't take much to get to come back down. Okay, there's not a lot of people sitting there waiting to buy, and it just doesn't take much to get the market to roll over and go through a bunch of price points, right? A bunch of price points with no volume, right? You got to have volume here. If there's no volume here, it's going to keep falling. So that's a big part of what kind of happened yesterday. Let me. There was another one I liked. And it kind of. I guess I didn't like it. It's fine. Basically, it was talking about how some of the option prices. Let me see if I can just scroll. Some of the option prices yesterday went from like 15 cents, basically at the start of like some of these puts, like some of these out of the money puts, right here, right as the market started rolling down, they were like 15 cents. And then when it got down here, it was like $40. Maybe that was on the SPX. Maybe they were worth $40 at that point on the SPX. So crazy. I mean, just crazy amount of volume differences. Or no, I'm sorry, value differences. Right, taking 15 cents and then making $40 out of that. But I mean, that's just on the per share basis. That's not even talking like the contract and then the total value basis. So yeah, it was nuts. It was nuts. Some of the values that were posted out there. Anyways, I thought that was really interesting. Just kind of wanted to share really why that happened. I mean, it was bound to happen. And one of the things I did mention yesterday was watch out for a very quick, sharp sell-off before that happened. That was one of the reasons why I was talking about you probably want to be looking to be bearish here over the next 2-3 weeks. But just didn't think it was about to happen, literally about to happen. But you expect the market to bounce and probably just float up in this area here for the next couple of weeks. I wouldn't expect us to continue to push much higher, but I mean, if it does, it does. I wouldn't doubt it. Just an interesting day yesterday with that. Typically we'll see a little bit more of like a gap down and then trade lower, but that just all happened right there in that last hour and a half. It's kind of nuts. All right, anyways, let's continue on. VIX. Let's see what the VIX was super quiet yesterday. Before that happened. So let's take a look. So yeah, the VIX was like down here. About down here when I got on, and you can see what happened there for the rest of the day. I'll go to a 5-minute. Yeah, you can see it really ran up, especially once we started really breaking down. So 1345. Where were we at price wise? 1345. Right here. So the VIX actually started popping before we saw a lot of that volatility on the volume kind of pick up right here at this time period. So yeah, it was a very interesting day there. Anyways, that's the VIX. Kind of VIX getting a little bit higher today, which is kind of interesting because the market's actually higher. So kind of interesting to see the VIX continue higher and not actually drop off as much. That's very interesting. All right, DXY dollar rolling a little bit down. Hasn't broken last week's low yet. Looks like it wants to. Probably does it soon. This 101 level is going to be very important. That'll probably be the next spot we probably stop. I mean, once we take out last week, so I can't imagine we take that and then just quickly bounce like a false breakdown. Gold looks like it wants to. Nice little, look at this little pennant pattern here. Look at this. I mean, that looks really good. That looks really good. If we even go to shorter time frames, I see even like a daily cup and handle here. Yeah, you can see a cup and handle type action right here. Cup, handle, probably break that around 108.50, 190. Well, I'm sorry, not 108, 189.50, 190. That would look pretty good. So yeah, gold looking pretty good there. 10-year yield, yep, we saw that yesterday breaking down. Really hasn't done a whole lot, especially the 3 previous days. Not a whole lot, but bouncing a little bit today. Okay, bouncing a little bit today. 10-2 inversion bouncing. Okay, so the 2 years not bouncing as much here today. HYG still having a hard time getting through this zone here around 77.50. Okay, I'm just gonna leave that as for now. I don't really have any thoughts at that level. I want to see it either break down or continue to consolidate. LQD is kind of still consolidating, not a whole lot going on there. TLT, not. This could be considered a little bit of a false breakout. We'll have to see here over the next couple of days what kind of goes on here. It still just might continue to consolidate sideways there on the TLT. All right, let's take a look at sector rotation. All right, sector. There we go. Man, it's going to be so weird because we're got a huge gap across the markets today. All right. So from there, discretionaries outperforming on the day. Our largest outperformer. Healthcare, materials, industrials, tech, communications outperformers on the day. Underperformers, financials, real estate, staples, energies, and utilities all outperforming on the day. Okay. So if we take out the gap, see how do things look. Healthcare, industrials, materials, discretionaries are outperforming. Okay. Tech actually is one of the big laggers, right? You take out that gap for tech, not a lot of people buying it. All right. So tech actually is the biggest underperformer. You got staples, utilities, real estate, communications, financials, and energies as well. Here's the AAII number that came out this morning. What's interesting is the bullishness went higher, right? The bullishness has gone higher. It's up to 52.9%. This is not the highest point, ever. Don't think that it's the highest point over the past 1 year. I mean, that's a new high. I think the previous high was like 52.3 or something like that, and that was back in like June, I believe, when we topped out in June. But notice this one. The bearishness also ticked higher. Okay, all right. So the bearishness jumps. Went from 19.3% up to 20.9%.